We good to go?
Yeah.
All right. Welcome, everybody. Thank you for joining me today. You're probably wondering what on earth we're doing here, but and what the Prosperity Society is going to be. And I'm really excited to introduce that to you. This is something that we've been working on and kind of building a vision for several months now. But also something that some of the experience that I've had has been preparing me to do for even longer than that. So I'm really anxious to be a resource. I'm really anxious to kind of show you what I have in the works here. And I'm just so grateful that you're joining the first live stream of the Prosperity Society. My question and answer live streams are meant to allow my clients to have more access to me and give you a set place that you know that you'll be able to come on a monthly basis to be able to ask questions that you've been wondering about. On top of that, there's going to be people that really don't know what questions to ask, so they're going to end up joining this type of thing just to hear what other business owners or what other people that are involved in financial things are asking. And so it's really meant to just be a group where we can all kind of learn from each other, but also it's for you to be able to have a place where you know that you can come and get answers. So thank you for being here today, and I just want to maybe just chat a little bit about what I've done in the past on this type of thing. In the past, I had created a platform like this called Tax Tuesday, where people would come and they would ask any question over 30 minutes to an hour, and I would just rapid fire answer those questions. In the beginning, there was 10 people. Then there was 20. Then there was 50. Then there was 100. Then there was 500. And it just blew up and really became a really cool group of people that kind of got together. And so I kind of missed that. I really enjoyed kind of doing that thing for the clients. And so when we were kind of building out what the Prosperity Society was going to be, I really felt like having a Q&A session where it's pretty laid back, meant to be a little bit informal. You're going to pop questions into the chat. You may email me questions beforehand, and I would hop on and just answer those questions for you. And if there was follow-up, maybe we'd schedule some time, or perhaps you would just in the chat say, hey, I want to understand a little bit more. Can you expound on it? So it's really meant to just be laid back. I used to do it without a camera, but I felt like you guys want to see me. You want to maybe see my face. So anyways, we're kind of changing that up a little bit. But I would love for you guys to just load questions into the chat. I will go through the chat and I'll look at your questions and I will pick away at answering those questions, and hopefully the things that I end up getting through is something that's helpful to you and other people. As far as what the Prosperity Society is going to be, the Prosperity Society is meant to be a place where people can come for really positive and strong information when it comes to elements of life that are a pain. So taxes is a perfect spot. Like people, it stresses them out. It gives them anxiety. They're never sure if they're doing it right. There's all kinds of different stuff that really brings a lot of stress into the world of tax. And so tax is a spot where I feel like we can really be helpful. It's really going to evolve. And in the beginning, it's going to be a lot of tax. It's going to be a lot of training videos. It's going to be me breaking down certain concepts that people ask about a lot so that there's a resource for you to just go to. But it's going to be live Q&A sessions, and then it's going to be training videos built on tax efficient tax strategies and tax planning, and business owners and individuals being proactive about their tax situation. So we're going to build that piece of it out. And then over time, we'll probably get into some other things like investing. We'll get into other things like business management. And it's really meant to be a place where people can come and kind of say, hey, I have some coaches, if you will, in certain areas. And so that's what some of the Prosperity Society is going to eventually evolve into, and I'm going to have other contributors who are going to come on and help me with that. And so I think it's going to be a really cool place for you guys to just absorb really good information in pain points in life. So with that being said, I've done some introduction. More of this will be unfolded as we build it out. We're constantly working on our website. We're constantly working on our reach so that we could get more people into it. And I appreciate kind of just the start. I mean, right now we have more people on than when I started this type of thing the first time. So thank you so much for being here. And I'm going to start jumping into some questions that I have. And we'll hopefully be able to answer all the stuff that you give me. I will say this. If you end up stumping me, I'm not too prideful when it comes to that kind of stuff. I will say I don't know. But if I do ever say I don't know, I will get you a good answer. And it might be either on another episode or it might just be something a little more direct. But there have been times where I haven't been 100% sure, but if you happen to do that, then thumbs up to you because it helps me grow. The first question I got was from Holly in Lehigh, Utah. She called me asking questions about what she should do about her dependents' tax returns. Now, she has kids that are in college. She has kids that are in missionary service. She has 16 and 17-year-old kids who are working and wanted to know the implications of should she be claiming her dependents and what things should she be looking out for. I prepare her return, but she was trying to prepare her own kids' returns on Tax Act because they just had small W-2s and things like that. So I wanted to just kind of maybe spell out a couple of the implications that she would have because I think this is helpful for people. All right, so after a kid is 18 out of the house, if they're in school, you can still claim them as a dependent. As a dependent, you'll get a $500 credit on your tax return for doing that. But a lot of times, the kids have been working themselves and have their own W-2s and things like that. So a lot of times what will end up happening, and usually it's minimal, maybe they made, $8,000 working at a rec center or something like that. So they're like, hey, should I even be filing a return? How should I be filing this return? So on the kids side, there really is some planning that needs to happen. Sometimes it's totally better for a kid to file their own return and be left off of their parents' return. So, the parents are like, well, that's a bummer because I don't get the $500 credit. But on the other hand, when the kid is in college and has tuition and an opportunity to get an education credit and they could file their own return and they're in a low tax bracket, oftentimes it's good for the kid to file on their own and not be claimed by their parents. And so this is something that happens every year. Every year this will happen where somebody will say, well, I already went and filed my kids' returns and now I need you to file mine. And then it gets all goofed up. So what I told Holly is I say, well, hey, let's hold off on filing your kids' returns until we're done with your return. One of the biggest implications with the parents' return is that if you make $160,000 or above, you're not going to qualify for the education credits. So if you, the parent, doesn't qualify for the education credit, then you want your kids to file on your own because they're getting refundable education credit money from the government. The total benefit when it comes to tax is way better if the kid will file on their own. Now let's say you do file, you make less than $160,000, and you're like, I'm gonna get that education credit because I pay for the kid's school. So I want the credit on my tax return. I make less than $160,000, so that's totally fine. What you'll end up doing on there's this one little tiny box, and you could check on the kid's return claimed as a dependent by somebody else. Now, when you file that return, you're not going to take the tuition credit on the kid's return, but you are going to check that box and then let the kid file their own return and get whatever money that they're entitled to get back, but it will be without the tuition credit. Then when you, the parent, does your return, then you'll be able to say, okay, I'm going to claim my kid as a dependent, I'm going to take the education credit, and there won't be any issues with the IRS. So there's just those couple implications that I really just wanted to make sure that I kind of went through and explained, but it usually does take some careful planning, especially if you're high income. If you're high income, then you're definitely going to want to make sure that the education credit is something that you are considering. All right. Al, thank you for being here. Ray, let's kind of talk about some of your stuff here. You kind of are in a spot where you have some implications when it comes to selling rental properties. And I've spent a lot of time in real estate taxation. This is something that is an expertise of mine. And anytime you're thinking about selling a property, buying a property, or you want to know the tax implications of what would happen if you do it, I strongly suggest spending a little bit of time with me going through your options on that. And Ray, I appreciate your email earlier, and then also kind of posting some of these questions into the thread. So what he says is, can you briefly go over the different options a real estate investor has to sell a rental property and the different tax ramifications for each option? All right, number one, let's just say you don't want to be a landlord anymore, and you're like, I am just going to straight up sell the property. If you're going to sell the property, and this doesn't involve any creativity really, the numbers are just the numbers. I bought a property for $200,000, now I'm selling it for $300,000. I've been renting it for the last 5 years. Let's just say you're in a spot like that. All right. Whenever you have a rental property, you're depreciating that rental property. Every year when we do the tax return, we're going to calculate depreciation on your property. It's usually going to be over a 27.5 year period. So if you bought a property that was $200,000, you probably have, like, let's just say for round numbers, you've got $5,000 of depreciation that you've been taking. When you take that depreciation, the $200 that you paid is now reduced by the depreciation that you've been able to take over the years. So 200 minus 5 years at $5,000, you're going to be at $175,000 of what's called net book value of your property. You're all in on it, 200 minus the 25. Now you sell it for 300. You have two elements of gain there. Okay? You have capital gain, and then you have depreciation recapture. Now, the $25,000 in depreciation that you've taken gets recaptured and can get taxed at 25%. It's going to be a higher rate than what regular capital gains are. The other $100,000 in between $200,000 and $300,000, that other $100,000 is a long-term capital gain at 15% federal tax rate. So what I would do if I was sitting down with somebody, I would say, okay, if you're just going to straight up sell it, you've got $100,000 at 15%, that's $15,000. Then you have $25,000 at 25%, which is like, another, let me do my math here, 25. It's going to be another like $15,000, okay? So I would just say if you sell the property, you got $30,000 in taxes. Oh, and then you're going to do commissions and all that kind of stuff. So, this is what you would be netting out. Now, if you're like, hey, Ronnie, I don't really like the sound of the taxes, right? I don't like the sound of paying, $30,000 in taxes. All right. And I want you to help me get a little bit more creative. All right, here's an option. You could do something called an installment sale. All right, an installment sale is where you, the seller, end up saying, I will take payments over time. I will sell my property to Ronnie, and instead of getting $300,000 all up front, I'll take $50,000 a year for the next 6 years. All right, now what you've done is you've taken that $125,000 of gain and you've now spread it out over a 5-year period or a 10-year period, whatever you decide to do. But now you're not paying the 30 grand all at once, you're paying it over a 5-year period. That works out good for some people because they're like, well, I don't want to pay all the tax right now. I don't mind carrying a note and allowing people to pay over time because I don't want to pay all the tax right now and I don't really need the money all right now. So an installment sale lets you spread tax over a period of time so that you're not paying it all at once. I've done some deals where somebody's trying to sell a property in November or December, and I would say, hey, why not take half now? Why not take half in January? Over a 2-year period. Now you've stretched your tax over a 15-month period instead of having to pay all the taxes in April. So little tricks of the trade there that you could do on an installment sale. The next thing that works out pretty good is a 1031 exchange. A 1031 exchange is where you're going to say, okay, I'm going to sell the property for $300,000, but then the money that $300,000 that I ended up receiving from that, I'm going to directly roll that into a whole nother deal. So let's say you're in university housing and you hate dealing with students. But then what ends up happening is say, okay, but you know what? What I really do like is townhomes in a different place in a retirement home. Okay, the income's more stable. They're going to stay there longer. They're not going to destroy and party in my house all the time. Different things like that. You could say, I'm going to take my college housing, I'm going to sell that, and then I'm going to roll it directly into another deal. All right. The rules when it comes to 1031 exchange is I don't have to pay any taxes on that transaction. You can actually roll that and defer that tax until you sold the townhomes in the retirement home. So what people tend to do is kind of, move up. Maybe they're in a condo and then they get into a single family rental and then, maybe they'll do a duplex or a fourplex and they kind of try to just 1031 and kind of keep doing that. So those are a couple of the different options. Now, there are intricate details about going through those latter two. You have different compliance things that you need to do with a 1031 exchange. You have to hire a qualified intermediary. You've got to identify what your new property is within 45 days. You have to close on that property within 180 days. So there are some things from a compliance perspective that are really important when it comes to all that kind of stuff. So that's just something that I kind of want you guys to understand as kind of the different ramifications of each option. Now, sometimes people will want just cash. They're like, hey, I've got a rental property. It's got $200,000 in equity in it or $100,000 of equity in it. What can I do with that? Sometimes if you don't want to pay the tax, you're not sick of the renters or anything like that. Maybe you just refinance the property. A refi doesn't have any tax ramifications because it's a loan. Okay, so you can refi your property and be in a spot where you now have the cash, didn't have to pay the tax, and now can use that cash to maybe go buy other properties. If, what I always will say with that is if your risk tolerance falls within that, then fine. And I kind of mentioned that, and Ray kind of asks, does anything happen when when you refinance and the amount you take exceeds your cost basis? You have to be careful of that because if you end up refinancing and then you're like, hey, I just want to keep the money, then that ends up that could be a taxable event. But if you end up refinancing and then bought another property, that's not really an issue. But if you just took the money and kept it, that's an issue. And then when you ask, does the refinance do anything to your cost basis? No, it does not. So you would not say, hey, I bought the property for $200,000, but then I refinanced it for $100,000. Your basis does not go up to $300,000. The only thing that would increase your basis in that is whatever mortgage origination fees or points that you ended up paying to complete the refi. So those are all really awesome questions. Yeah, that is good stuff, and I definitely wanted to make sure that I touched on some of that. Ray, I got a little bit of a feeling that I might be having a little bit more conversation with you on that, but I love that you brought that up for the group, because this is one that I have all the time in my practice with my clients and things like that. So I think that's really, really positive. All right. The question from Ali is, I want to bring on board a Canadian engineer sitting in Canada. What are the tax payroll implications? Okay. It first starts with, you have a foreign person. Now, most likely what you're going to do is just treat them as a contractor. All right. Now, there is this whole conversation between employee and contractor. Now, this person likely is going to be working from their home or working from their office in Quebec City. And so they're most likely going to be a contractor, and that's totally fine. So what you have to do is you have to keep on file what's called a W-8-BEN. W-8-BEN. It's just going to be them saying, yes, I'm a foreign contractor. And that's all you got to do. You just got to keep it to your files. You don't file nothing with the IRS. It's totally fine for you to hire somebody that is foreign, that lives in Canada. You're not going to pay any payroll taxes unless they don't give you an ITIN or something along those lines, because you still you don't 1099 them, but you do want to keep that W-8-BEN on file, because if the IRS ever said, hey, who's all your contractors, you're going to show them, hey, I've got this this person. Now, if they ever came and worked in the United States and things like that, maybe the United States would have an issue with them working in the States and not filing a 1040 NR, but that would be something that they would have to deal with on their end. As far as compliance for your company, the key is literally just getting them to fill out that one form, and then you could just pay them as you would any other contractor and take an expense for what you're paying them. All right, so Ray, follow-up question. I should have maybe scrolled down a little bit more. Does depreciation recapture end up getting stretched out? No, the depreciation recapture does not get stretched out on an installment sale. Great question. Is it possible to do both an installment sale and a 1031 with some of the cash? It is possible, and like I said, there are a lot of moving parts with that kind of stuff, and we want to make sure that we're totally compliant with it. But yes, that is totally possible. All right, Balanced Health, welcome. What about refinancing with a first position HELOC? Would that change anything on a rental property? It would not. No, it doesn't increase your basis. Anytime you have any home equity line type of stuff, it's not going to change the purchase price. And your cost basis is going to be based off of that purchase price, plus any improvements, plus any refinance fees that you've paid and that sort of thing. So I'm not going to see a change on that. All right, so feel free to pop more questions in. One thing that I was going to bring up that I want to talk to people about is kind of the tax world right now. I don't know if you guys have seen in the media, but the pandemic really just kind of exposed the IRS in ways that maybe some other entities haven't really been exposed. But they ended up getting so far behind in everything in everything that they were doing. So one of the things that I wanted to kind of bring up is something came into the media the other day that said the IRS was 24 million paper filed returns behind. So knowing that and kind of seeing that, even despite in the last 2 years them extending deadlines out and doing different things like that, it's crazy that they haven't been able to really kind of keep up. But I think with some of their policies and how they were working, they really have gotten really far behind on certain things. And I have people who maybe went 9 months without getting their refunds, and some even longer than that. So it's been kind of interesting that we've been in a situation where the IRS is kind of always playing catch up. And so with that, I really wanted to emphasize something. The IRS's computers, they have a general understanding of what our tax return should look like. And I think where I've noticed some of the people that are getting hung up is when that tax return doesn't look the way they think it should look, and so they've been setting them aside and not processing them. So I really want to make kind of a comment about how important it is to be really accurate with what we're doing. I would say even internally for me, because I want to be accurate, that it's caused even me to slow down a little bit in how I'm preparing these returns. There's tons of moving parts that have come out in the past couple of years. There's stimulus money that went out that we're reconciling. There was advanced child tax credits last year that have been an extra layer of compliance that we haven't really been accustomed to. There was the CARES Act, which allowed people to pull money out of their retirements if they were affected by COVID, and there's been some stretch provision on the taxability of that over a 3-year period. So there's just been some things from a compliance perspective that have made what we're doing a little bit more tedious, a little bit more detail necessary. It's kind of been the type of thing where sometimes we've had to just kind of back up and say, oh wait, you know what? We need to ask 3 or 4 more questions on that type of thing. So I feel like one thing that I would say to people who are listening and people who are not necessarily even working with me, but if you're working with somebody, there's probably a level of patience that we need to have, especially if somebody is doing a quality job, because there's just more. And so I've noticed it in businesses. Sometimes there's labor issues, maybe there's pay issues, there's different things that are affecting business right now. But one thing that I will say about the tax industry right now is that the IRS being backed up is a huge issue right now. Perhaps you even tried to call yourself and ask a question, and you'll sit on hold for an hour or two, and then it'll just hang up. And you really can't get through to anybody. I've had people who are coming to me with IRS issues, and I really, in my practice, will say that I'm not best suited to take care of something like that just because they're so far behind right now. So I wanted you guys to be kind of cognizant of that. I also wanted you to be aware that we're really trying to do a lot more as far as being accurate. That way there's no issues with when we do file something, we know that it's correct, and we're not going to have any issues with audits. We're not going to have any issues with letters being sent out. We don't want to have any issues with maybe that refund not being processed. Some people will still choose to mail file their returns, and if people are choosing to mail file, that's their choice, and they can totally do that. But what I would say is, don't hold your breath on when that refund will be processed. I mean, it literally could be a year or two before it's processed. So, keep that in mind if you're one of the people that don't necessarily like to electronically file returns. So, anyways, I just wanted to make you aware of that. If you follow, maybe I don't know if some of the people that are on this thread are on Twitter, but there's something called Tax Twitter. And if you follow Tax Twitter, there's a lot of accountants on there that are kind of go through and kind of talk about a lot of the issues that are in the industry right now. And there's definitely some accountant fatigue that's out there, just like every other industry right now. Anybody who's been working hard through the pandemic has fatigue right now, but a lot of it has been brought on by challenges with the service and complicating taxes instead of making them simpler. So anyways, I just wanted you to kind of be aware of how we're kind of dealing with things in our current state. So right now, we haven't heard anything about any deadlines being extended for right now. My plan is to tell everybody that the deadline is April 15th, even though it's really April 18th. That way I don't have to work a whole nother weekend, but all weekend. But right now we're grinding through our list and churning out a good product for people. And it's been taking us a little bit longer to do it at times, but I just want everybody to know that's because we've been trying to do a quality job. And one of the things that I will say is that there is no shame in filing an extension. Some people get so bent out of shape about filing an extension, and I understand it to some degree. I've had people who have said, I've always filed on time for 30 years. I don't want to file an extension. But what I would say is that there is no shame in filing an extension. All right, so if there's more questions, I would love for you guys to pop them in. As you guys maybe are thinking of some last minute questions or anything like that, I do want to talk just a little bit more about kind of our platform and what we're going to be doing over the next several weeks. I did have some issue with when I emailed out this link to my client list. For a lot of people, it went to spam. And so there is kind of some technical stuff on the backside that I need to kind of work out. But I'm planning on doing these live streams once a month within the Prosperity Society. I'm going to be dropping targeted courses related to various tax topics that you guys always ask me about. I'm going to drop courses in there. It's going to probably be a 5 to 10 minute deep dive into specific topics, and we'll train you guys, and we'll drop videos into that every single week. I did mention that I'll have other contributors that are going to come onto this, and there is going to be various levels of this service. And so if you do check out kind of the Prosperity Society, our website on that, we're going to do some videos on explaining how to sign up and what the various levels of service that we're going to have are going to include. But this is meant to be a really awesome educational platform that is going to be a nice resource that also is going to be affordable for people. For my client base, people who have been working with me, we are going to have a little promo code for you when you sign up. And for people who are not my clients, I would love to welcome you into something like this and have somebody that you can go to when your accountant didn't call you back, when your accountant didn't let you know that they were filing an extension, when your accountant didn't do year-end planning with you and didn't send you an invitation to do year-end planning, when your accountant never gave you advice over certain things. All the different things whenever somebody calls me up and they complain about whoever they were working with before. The idea there would be, hey, even if you're not necessarily my client for tax preparation, I can be somebody that you can consult with, that you can plan with, and somebody that you could pop questions off to and not feel like, hey, I'm going to get a big bill, or every time I call my accountant, he sends me a bill. I've heard these types of things over the course of my experience, and for me, it's about just, let's come up with a reasonable rate somewhere that you can land when you need help, and we're going to have the information kind of at your fingertips so that you don't have to pay the expensive planning fees and all that sort of stuff. So anyways, that is the vision of the Prosperity Society. Hopefully, this education is going to help people make better financial decisions, keep more money in people's pockets. That's what's fun for this job for me. A lot of people will say, dude, how can you do tax all the time? It's such a boring subject. I don't know how you end up doing it. But when I could come together with somebody and give them ways that they could save money on their taxes and, allows them to use that money to fund 529 plans or put more money into their retirement plans, that's the kind of stuff that helps, make this job fun. So anyways, that's what I'm going for. That's what we're doing with this platform. There will be more to come. There's going to be free content too. We're gonna put free stuff out there on YouTube. Some of the stuff, if you maybe have already looked at my YouTube channel, I have YouTube stuff out there. I would like for you guys to subscribe to the Prosperity Society. You can see the button down there. I would like for you to subscribe to it so that you can stay attuned to all the different things that we're doing. And I will continue to build on this. I'm seeing some of your comments. Whatever your feedback is, I would love for everybody that's popped on and watched this to give me feedback. Do you want it longer? Do you want it shorter? Do you want it more often? I would love for that feedback, whatever it might be, from you guys, because I want to do something like this for the group. And so that's kind of what we're going for. That's what we're aiming for. Allie, next time I hop on, I will definitely do more when it comes to tax planning type discussions and different things that you can do. There's going to be a section in the Prosperity Society that talks all about year-end planning ideas and how to implement them. So, there's going to be 20 videos on that. That's actually one of the sections that we've already talked about. So, anyways, thank you for your time today. I hope everybody's enjoyed this. I really appreciate you guys coming through, and I really look forward to doing more of these. Thanks so much.